All right, everybody, welcome back to the discount. I hope you're all having a wonderful Sunday. It's been about a week since I last jumped on here to break down markets for everyone. Where have markets been? Where are they going? We're going to break down all of this for you with some common sense technical analysis. And we're going to do it across the SP500, the Nasdaq, the Russell 2000, all of the major indices, as well as the majors in crypto, Bitcoin and Ethereum. What is going on and what can we expect moving forward? As always, let's start off with the SPY, the S&P 500, and we always start out with the daily chart. As you can see, I have my Fibonacci retracement from high to low. That bear market trend line, I love it. Look how perfectly it played off of it. And where are we today? Well, I want to draw a new trend line for everyone. Let's start with the market bottom back in October of 2022, and let's draw it and connect it right here. I'm a big believer in major trend lines and major levels. Simple price action analysis. Let's go ahead and clone this trend line and put it right here. As you can see, it is an important area. It was finding overhead resistance. It found support. It found overhead resistance. It broke out, found support, so on and so forth. I know the macro indicators are all pointing negative, but the reality is we are in a very strong uptrending market. We're going to get to the Nasdaq, but as you can see, this is an extremely strong market as well. But back to the spiders, everyone is looking for a pullback, and actually quite a lot worse. They're looking for a significant market turn that's going to bring the indices down another 25, 30, 50, 60%, just like 2008. And that's really where we are on the charts right now. Everyone is worried. We are climbing the wall of worry. But what's really happening here? Well, first, let's zoom in a little bit. As you could see, as I zoom in, we had a couple of ugly candles here. These are signs and signals of trend changes typically. And after it's been up for so long and into some major areas of overhead resistance, when you get these types of candles, you're typically looking for a change in the opposite direction of where the market has been. So let's go ahead and clean it up. What can we expect this week and the next couple of weeks? Well, as long as the market doesn't close anything daily above this high or gets above the high period, we can expect some pullback and some consolidation here. It would be totally normal for the SPY to come back down and retest not only this major trend line area, but as well the 618 retrace. Very, very important. Why is that important? Well, look at how it ate time off the clock to break above it, almost retest it, and now it is totally normal after these candles to come back in and retest this area. We also have a gap down here that needs to be filled at some point. Now, this is a pretty wide range right here for the S&P to pull back into, but let's go ahead and zoom out again to get the bigger picture. What would we be really doing if the markets were to pull back in the next week or two, or several weeks? The market's coming back to fill this gap and retest some important areas. Now, where the market bounces from there and resumes uptrend, if it's going to resume uptrend, is the ultimate question, but it is totally normal and it is not the end of the uptrend if it were to get into this area and these important price levels, bounce off and resume uptrend. So let's clean this up. Markets pull back. Everyone's screaming with their hair on fire. And what did we really do? Well, we had a pivot point here, a pivot point here, and now we have another pivot point here that's going to coincide with the 50 retrace at 413 on the SPY. Depending how, if, and when it gets in there, that should be an amazing buying opportunity for the resumption of the uptrend. Let's clean this up. So what about the bear scenario? Where does this start to look wrong? Well, like I said, we do not want to see this get this deep into that 50 retrace at 413, start to get below, close a couple daily candles below. That is your signal that this thing is headed lower. Right here, the trend is broken, and that means we want lower prices. What if we stay in the ultimate bullish scenario? Well, we could pull back, hit the 618, super important, coincides with this huge pivot point right here, and simply resume uptrend back towards all-time highs. If we get some type of candle here signifying that, like a bottoming candle or something, on volume, you could play along against that low for the resumption of the bull market. But right now, there's nothing to do just yet unless you want to play the short side. It is not a wrong short, it's just a tough short because we are in such a strong market, but it is certainly a fair swing short to play to hit that 618 retrace, take some profit, and hold some for lower. But let's wait and see what we get this week. This is all the same market. The SP 500 and the Nasdaq are moving together in unison, albeit tech is stronger. And let's go to the Nasdaq. As you can see, the Nasdaq is a little bit stronger. We have this similar trend line here from the bear market. And here was the pivot point that signified the low for the Nasdaq. We're going to get some more volatility, most likely in the Nasdaq. That's just the way it is. And if we pull back here, I'm going to be looking very heavily for a bottom or a breakdown, just like the S&P at the 618 retrace at about 350, give or take. If it starts to break down here, you can expect the Nasdaq to come down to its 50 retrace at about 331.50. It also is filling a gap right there on the chart. If you could see it right here, let's zoom in. So we're zoomed in now. Here is that gap on the Nasdaq. If we pull back and we start to resume downtrend, I expect the Nasdaq to fill that gap. And this is where it starts to get interesting. If the Nasdaq can't hold this level, we're going to be looking for lower prices. Same markets, keep an eye on the SP 500, but I want to bring you over to the market that I have my eye on, which is the Russell 2000. You can see I already have my drawings up on the Russell 2000, both scenarios. In my honest opinion, what the Russell 2000 does from here is going to signify what the rest of the markets do. The S&P 500, the Nasdaq, Bitcoin, your individual stocks, everything. Why is that? It is my favorite market leading indicator. Let's zoom in and see where we are. As you could tell from the banking crisis and the bear market in 2022, this chart is not looking as good as the S&P and Nasdaq have been, which is making investors scratch their heads. If this chart is showing weakness, then you can expect the S&P and the Nasdaq to not get very far. Well, the Nasdaq and the S&P have already been pretty damn far. And as you can see here, the question is the Russell breaking out of this downtrend? Right now, the charts are telling you it is. There is a gap down here that I expect to be filled in the event that all markets are going to pull back. The question from there is, if the Russell goes and fills that gap while the markets are turning, do we bounce off out of here and break out, or are we going to fill the gap, close below it, and start to show weakness? I would not be surprised if it came down to this double bottom here after that. Everything is showing weakness, and that is where you want to be on guard for lower prices. We currently have call options that we are risking to zero, so you know your risk, whether it's $500, $10,000, whatever it is. But I see this as strength. I see this as markets are turning, and once it does and the Russell holds up, you're going to want to be long the Russell. It is a solid risk reward, but again, everything comes with risk and nothing is guaranteed. This is a probabilities game. What's the most bullish scenario for the Russell? Well, this blue arrow is. If it can hold above here and show strength while the markets consolidate or pull back, that is your ultimate trigger that this thing should be heading higher, at least to the 50 retraced at 203. If the Russell does this, you can expect the S&P 500 and the Nasdaq to go and break all-time highs, or at least test it. So a pretty big week ahead and a pretty big couple of weeks ahead. Keep your eye out and be sure to follow us on our Telegram channel for these call outs. We are in there every single day posting charts and analysis. Here's the Telegram channel. As you can tell, we are constantly posting charts and analysis in real time as I see it, as we get updates. So head on over here. It is totally free. and you will get real-time updates on where we think markets are heading day to day. All right, next up, Bitcoin and Ethereum. What are they going to do, and where are they right now? First, I want to take this chance to thank our sponsors. We have partnered up with Coin Market Manager. This is where I am journaling my trades. It is an automated journaling tool for traders and investors. It is completely automated. As you could tell, click on your API manager, connect your exchange. You can request new exchanges. As you can see, I've already started logging a few of my trades, some of my concluded trades. It tells you your win rate, account risk, results, everything you need to become a better investor and trader in the markets. The link is in the description of this YouTube channel. You could try this out completely free. It is a top-notch tool to automate your journaling and see how you can get better. All right, now back over to Bitcoin. Where is Bitcoin and what has it been doing? Well, everyone is wondering what is going on and why has it just been in this range? This is a super important range. If you remember from our video, we had drawn the same parallel channel here, the same upsloping trend line. What did it do? It broke out from here into this new trend. What a trade that was. Congratulations, everyone who took it. Now, pretty simple from here, guys. Bitcoin has to hold this level if it's going to make any breakout to that 35,000 key gap fill level in the CME futures. It put in a nasty candle a couple days ago if we zoom in a little bit here. And this candle is just not really what you want to see. However, again, it is holding this range. You can trade the range. It goes up, it finds resistance. It comes down, it finds support. Resistance, support. Now, here we are today. Would not be surprised if we get some type of market rally to come in a little bit further into this range. Now, do we hit this top range again and come back down? I don't know. But what I do know is this. It would be totally normal for Bitcoin to break down a little bit, come down and retest this level down here at about 27,000, which coincides with the breakout area and a huge area of consolidation here. People will be thinking it's over. It's simply coming back in to retest the muster of this market and see where the buyers are. That is a definite long scenario. If we see it get in here and hold support, I will be looking for longs. And it only starts to look wrong if we get below here, start closing daily. That means it's probably over for a little bit and we got a new downtrend on the horizon. But let's go ahead and clean this up. Let's zoom out a little bit again. Pretty common sense. If we break this range and hold it, we're going to be looking for that 35,000 level easily. Besides a scalp opportunity that I'm posting in the Telegram channel, I'm not really looking to size into any short positions right now. Nothing on the chart is telling me to fight an uptrending market, even if we get some type of pullback to 27,000. I'd rather be looking for longs. Now, I've been saying in the channel, Ethereum is to Bitcoin as the Russell 2000 is to the SP 500. What do I mean by that? Let's head on over to Ethereum. A little bit different of a looking chart, and I know I drew a lot of trend lines in here, but bear with me. Ethereum has been lagging just like the Russell 2000, but it's also showing strength in an uptrend. So if everything is going to consolidate and or pull back, I want to see Ethereum hold this area and trend line for a long opportunity to play catch up. The catch up trade on Ethereum would bring it easily above 2,000 and to that 2,200 mark. I drew that trend line because that's where I think it might run out of steam at first. You take profit there, and then again, if we break out, we're going to 2,400, and then ultimately we're going to 2,700. Where's Ethereum start to look wrong? Well, if it's not going to be the lagging catch-up trade and it's showing weakness because there's not a lot of participation in the markets for liquidity purposes, if it starts getting below here and starts closing below this 1682 level and this trend line, we're going to 1431 and see where it goes from there. So that's it, guys, for Bitcoin and Ethereum. Common sense technical analysis. Also, if you are actively trading cryptocurrency, I'll provide a link to Femex. That is where we are currently trading, providing 100x leverage on crypto futures. The link to Femex is in the description as well. And last but not least, make sure to type your email into our website. This way you're getting notified on everything that we're doing. We're going to be releasing a portfolio product on top of the Telegram channel so that you can track our trades and long-term investments in real time. So make sure to type your email in here. It's completely free, nothing to lose. We also write a weekly macro newsletter every Sunday. Last week, we talked about how Wall Street is adopting Bitcoin and what this means for its price. So head on over to the website. Have a great rest of your Sunday, everyone, and we'll see you this week on the charts.